Good morning, Wall Street winners. It's Friday, July the 11th, and if we take a look at where we are in the pre-markets today in the Bloomberg app, you'll see that under the markets area and in the futures, everything is in the red. So we're setting up for a bit of a pullback. I think a lot of this has to do with just being a slow week and with Donald Trump coming out on a fairly frequent basis this week and announcing tariffs for a variety of countries. But you really need to dig below the headlines on those tariffs because they're not all as bad as they seem. So, for example, Trump made a statement that he's going to escalate tariffs in the trade fight with Canada with a 35% tariff threat. But the interesting thing about that is when you dig into that, it's on any items that aren't already included in the U.S.-Mexico-Canada agreement known as the USMCA. So yes, it will have an effect, but a great number of goods are covered in the USMCA. So it's a bit of a headline news item more as something to be of immediate concern. And it's really just another bullying tactic by the gentleman running in the White House or running the White House. Here is a graph that HSBC strategists put together comparing how expensive U.S. equities are from a price to earnings perspective. So on the left-hand side, you'll see the price to earnings multiple, and then on the bottom index, you'll see the year. And you can see that over time, the PE or price to earnings ratio, which is the price you pay for every dollar you pay today for future earnings times the multiple. So if it's a 20 times multiple, you're paying 20 times the price today for $1 of earnings in the future. And you can see that over time, this has been as low in the COVID era there of 12 times. And now we're up to one of the higher price to earnings multiples in around the 22-ish, maybe 22, 23 range, depending on where we're looking at the exact moment. We've been higher in the past as well, but we are nearing one of the higher times. So the question you want to ask yourself with this graph is, do you feel that equities are overvalued right now? And based on that assumption, it will help you to determine whether or not to be long in your equity holdings or have a more short-term perspective, take some profits off the table, and keep your capital in cash or money market funds where they're much safer should we go into a downturn. And I believe that with tariffs just starting to get rolled out now, we are setting ourselves up for a quick spike in the market and a pop with some positive earnings, specifically out of financials, but then a fairly quick pullback as we get into the August-September timeframe. That's what I'm thinking is going to happen, and we'll have to wait and see whether that plays out or not. Good luck in your trades today. If you like the videos, please hit the like and subscribe button.